ஸோ டியர் ஸ்டூடெண்ட்ஸ், ஸோ இன்றைக்கி கிளாஸில் நம்ம வந்து பேங்க் அக்கௌண்ட்ஸ் இதான் பார்க்க போகிறோம். ரைட். தென் ஃபர்ஸ்ட் ஆஃப் ஆல் மீனிங் ஆஃப் பேங்கிங். ஸோ பேங்கிங் கம்பெனிஸ் இன் இந்தியா ஆர் கவர்ன்டு பை த பேங்கிங் ரெகுலேஷன்ஸ் ஆக்ட் 1949. Section 5 of the Act defines banking as accepting for the purpose of lending or investment of deposits of money from the public repayable on demand or otherwise the withdrawable by check, draft, order or otherwise. Further, Section 5, the banking defines a company which transacts the business of banking in India. Therefore, a company which is engaged in some other business activities but accepts deposits of money will not be accepted as the banking company. Then, the business of banking companies in Banking Regulation Act 1949. Then, what are the functions or activities of banking? So there are some functions of banking or activities of banking. Then receive demand deposits and pay customers, checks drawn against them, and operate automated teller machines like ATM. Second one, receive time and saving deposits, issue negotiable orders of withdrawal and pay interest thereon, as well as provide automatic teller service ATS for funds from serving accounts to cover checks. Third one, discount notes, accepts and bills of exchange, supply credit to business from firms with or without security, issue letters of credit or and accept bills drawn there and there, transfer money at home and abroad, so make collections and facilitate exchange, issue draft, cashier's checks, money orders and certified checks, furnish safe deposit vault service, provide then custodianship for securities and other valuables, then provide personal loan, credit and service to individuals and lend or discount customer installment receivables of vendors, act in then fiduciary capacity for individuals as well as establish common trust funds, provide corporate trust services like stock transfer agent, registrar, paying agent, then escrow agent and indexer trustee, act as factors and engage in equipment then leasing, deal in government securities and underwrite general obligations of state and municipal securities, then invest in government and other debt securities, act as financial agent or depository for central government states and subdivision of states, then providing the miscellaneous service. So there are the different functions of banking or activities of banking. The next one, subsidiary books maintained by the banking companies. Then, so subsidiary books, these include the following: personal ledger, the bank maintains separate ledgers for different types of accounts such as current accounts ledger, saving bank accounts ledger, fixed deposits account ledger, recurring deposits accounts ledger, etc. Then memorandum book. The memorandum books, in addition to the subsidiary books, a bank maintains various other books of facilitates its works which do not form a part of double entry system. Some of these are then receiving cashier's counters cash book, then paying cashier's counters cash book, then cash balance book. There are the some memorandum books maintained by the bank. The next one, how to prepare the balance sheet. Then so balance sheet of the banking companies, then with the effect from 19th March 1992, the balance sheet of a bank is to be prepared as per the new form. schedules. Details of schedules are in below. Then capital and liabilities. So there are the 16 schedules. Then schedule number 1 to 5, capital and liabilities. So schedule 1, capital. Schedule 2, reserve and surplus. It includes capital reserve, security premium, revenue and other reserve, and profit and loss account balance. Then third schedule, deposits. It includes demand deposits, saving bank deposits and term deposits. Then fourth schedule, borrowings. It includes borrowings from Reserve Bank of India, other banks, institutions and agencies. Then schedule 5, other liabilities and provisions. It includes bills payable, inter-office adjustments, net, then interest accrued, provision for bad debts, provision for taxation. So there are the capital and liabilities. Then schedule number 1 to 5. Then assets. Then schedule number 6 to 11, there are assets. So schedule 6, cash and bank balances with the Reserve Bank of India. So cash in hand including foreign currency notes and balance with the Reserve Bank of India are shown under this item. Then schedule 7, balance with the banks and money at call and short notice. It includes banks with banks, money at call and short notice are shown under this item. So money at call is refundable at 24 hours notice, and money at short notice is refundable at 7 days notice. Then schedule number 8, investments. It includes investment in government securities, other approved securities, shares, debentures and bonds, subsidiaries, gold, etc. are shown under this item. Schedule number 9, advances. It includes bills purchased and discounted, cash credit, overdrafts and loans payable on demand, and term loans are shown under this item. Schedule number 10, fixed asset. It includes premises, other fixed assets including furniture and fixtures are shown under this item. Schedule number 11, other assets. Inter-office adjustments, interest accrued, tax paid in advance, stationery and stamps, non-banking assets acquired in satisfaction of claims are shown under this item. Schedule number 12, contingent liabilities. It is shown by way of a footnote. It represents liabilities not provided in the balance sheet. Then next, how to prepare the profit and loss account. So there are schedule number 13 to 16. There are profit and loss account. So profit and loss account of a banking company is also prepared in vertical form. Form B of the third schedule of Banking Regulation Act 1949 is to be used for preparing profit and loss account. It is divided into 4 sections like income, expenditure, profit and loss and appropriations. Then income. The schedule of income are schedule number 13 and 14 are income side. So schedule number 13, interest earned. It includes interest, discount on advances, bills, income on investments, interest on balances with RBI, etc. It should be noted that according to the new form, bad debts and provision for bad debts, other provisions are not to be deducted from the interest earned. For greater transparency in accounts, these terms are shown as separate items in the profit and loss account. Then schedule number 14, other income. It includes commission, exchange and brokerage, profit on sale on investments, profit on revaluation of investments, profit on sale of land, building and other assets, profit on exchange transactions, and income earned by the way of dividends from subsidiaries, etc. Then expenditure. Then schedule number 15 and 16 are expenditure. Then schedule number 15, interest expended. It includes interest paid on deposits, interest on RBI borrowings, interest on interbank borrowings, etc., are shown under these items. Schedule number 16, operating expenses. Salaries and wages of staff, rent, rate and taxes, printing and stationery, advertisement, depreciation on banks, properties, directors' fees, auditors' fees, law charges, postage, repairs, insurance, etc., are shown under this item. Third item of this section is provisions and contingencies. So, provision for bad debts, provision for taxation, and other provisions are shown under this item. Then, profit and loss. In this section, profit and loss for the current year, that means difference between income and expenditure explained above, and brought forward profit and loss are shown. Then appropriation. In this section, amount transferred to statutory reserve like 25% of profit, then transferred to statutory reserve as per the section 17, the banking regulation of 1949. So an amount transferred to the other reserve, proposed dividend, etc., are shown. The balance is transferred to the balance sheet. So there are the important things of bank accounts and how to prepare the balance sheet and how to prepare the profit and loss account for bank accounts. That's all. Thank you.